Hi, welcome to the video day, which is on the 28th of August, Sunday. In today's video, we're going to give our updated outlook and forecast for the USD. Now, in terms of pairs, we've got quite a few to look at. We'll go to the charts in just a moment. Now, in videos this year, generally we've been bullish of the USD. It has seen a really big move to the upside. There's far more strength to come. Now, in terms of last week, we did see a little bit of a pullback in the USD. Then it firmed up on Friday after Fed Chairman Powell said the Fed would be hawkish in terms of interest rate hikes going forward to combat inflation. That's a big bullish fundamental for the USD, but I think really will kick in soon, possibly in the week coming, is its safe haven status. There's numerous problems in the global economy and global financial system. We had stocks down heavily on Friday. If risk aversion gathers pace, the USD will surge to the upside. Okay, I think downside is limited. Now, in terms of looking at all the trade setups, let's go and do that right now. But just before we do so, obviously, always please do keep in mind, it's my view as of this moment in time. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques, learn our strategy, and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you can get live access to our member center. Also, join our Facebook group of traders if you wish and follow our Facebook page. Right, let's take a look at the opportunities. CAD, it's a monthly chart before I go to the daily chart. I just want to show this chart in terms of where we think the USD might go. You can't see it on the daily chart. Now, we're just below the 130 level. You've seen 4 candle tail rejections. I think if we go through the 130 level next week, we will basically hold the level, go to 135, and we could possibly go up to 140. Now, in terms of the USD, for us, it's just looking really, really bullish fundamentally. I just want to do a quick review of the bullish fundamentals of the USD generally before we go and look at our pairs. Now, in terms of a chart I want to go to, sorry, let me just do this. I want to look at the S&P. Stock markets, obviously, if they fall, that can be very bullish for the USD. Now, last week I did a couple of videos with a lot more background to the S&P, but here to mention it briefly. There's the short covering rally, goes up to monthly resistance. Big red on Friday, as Fed Chair Powell was hawkish in terms of interest rates going forward in the US. Market not prepared for that. They thought they might have a dovish tilt. Stock markets obviously don't like higher interest rates. The Fed, said it in last week's video, will probably move interest rates higher and for longer than the market expects. So if this stock market sell-off gains traction to the downside, the USD will gain significant support. Now, in terms of where I want to go next, I want to go here and look at the big picture in the global economy. This is the Sales Manager Index, which comes from World Economics, which is a forward-looking indicator, and it's basically indicating the world economy is heading back into recession. We've dropped below the 50 line. It is going to get worse. Okay, now a global economy slowing up is historically bullish for the USD. So, yeah, it's not going to turn around anytime soon. And there's one component of the global economy that's in really big trouble, which I'll come to in a moment. What about the US economy? It's kind of doing better than a lot of other economies around the world. It's kind of the best house in a bad neighborhood. It's also teetering on the brink of a recession. But the Fed have already said they'll risk a recession. They've got to get inflation tamed. And historically, if the US goes into recession, the USD strengthens. Okay. Now, in terms of where I want to go next, sorry, I'm on the wrong chart. This is the area of the global economy that is in real trouble. It was coming into focus last week in particular. It's China slashing rates, okay, to support the economy. Okay, now in terms of Chinese growth, it expanded just 0.4% in Q1. That's the biggest contraction since 2020, and it is going to slow further. Okay, now in terms of China, this is a chart of the IMF forecasts for annual growth against median economists. Now, the IMF are normally a little bit too conservative. They've got Chinese growth at just over 3%. We think it'll be worse than that. Median economists still not overtly bearish, just below the 4% level. Now, the problems that China has are huge, okay? And a lot of those problems are to do with the real estate bubble. 4 trillion out of 14 trillion GDP, that's 29%, is real estate, and it's a massive Ponzi scheme. Okay, now in terms of at the moment, it looks like it's unraveling. Look at that. Sales of residential buildings. Developers overextended, they're going bust. There's 40 to 60 million vacant and overpriced apartments. UBS last week expects the real estate bubble to burst and that to cost China $1 trillion. That will really cement a downturn. China, if you think about it, is the engine of global growth, not the US. And the problems in China are going to weigh on the global economy, weigh on risk off, okay? Or create risk off. Now, in terms of my next chart, I want to go, because I'm going to look at euro and euro correlated currencies. I did a full video on the euro last week with more charts. You can go and look at it. Euro area, it says recession warning here. Is going to recession, isn't it? Economic activity shrinks for a second month's chart from S&P Global. You can see PMIs, forward-looking economic indicators going into contraction. They are going to plunge, okay? To show you one more chart before we look at our pairs. Oh, where's it gone? There, sorry. Wanted to show the spike in energy prices. Electricity prices, they got parabolic. I think it was a 25% rise on Friday. It's bad. It could get even worse. I'm sure everyone's read about the energy crisis. I think in terms of Eurozone and European currencies, they're all going down. Eurozone is just guaranteed a recession. You're going to get real political problems in the zone. I discussed them all or more in my video on the euro last week. You can go and check it out. But we're totally or very bearish of the euro. Right, let's go and take a look at the pairs, entry level stops and targets. Obviously, I'm going to start with USD CAD. We're on USD CAD. Now, for anyone new to our videos, we've always got a view from the sentiment and fundamentals before we do our technicals. We'll keep them very simple, just basic trend lines. We keep also volatility in mind and momentum. Now, last week we were long from the 128.20 level, got above 130, but then we fell back and got stopped out, gave back profit. It was an okay profit. Then we came down to test 129. You can see the latest entry, 129.80, which was through this level here, which is now first level support. We're above 130. If we can take out this double top over here next week, I think we'll accelerate to the upside. Now, in terms of a slowing global economy, there's commodity currencies that really get hurt because commodity prices fall as the global economy slows. So in terms of USD CAD as well, noticed on our favourite sentiment tool, I won't show the chart here, you can go and look at it for yourself, on the COTNet traders positions, speculators have loaded up on USD shorts. Smart money commercials are long, so we're looking for speculators to get hit on stop. So in terms of this one, you can play it two ways. Obviously take a break of the double top here. If that double top gives way, you can see it here, 130.70, we'll go 129.70 as a stop, okay? If we don't rally and just come back this first level, you could key off it and use the stop I'm using. Yeah, obviously if you're bullish the CAD, this stop here, 129.40. Right, next pair is going to be AUD USD, heavily correlated with China. We had a rally there, fell back, and we came up to the 70 level. On Friday, the move gets rejected. Okay, now in terms of Australia, I just feel, yeah, the best is over. What's going on in China, particularly in the real estate sector, will hit Australia's biggest export, which is iron ore. Also hit copper, another major export. So yeah, looking for this to follow through the downside. This is pretty easy if you want to do it. If we come into a new low, I'd just sell. If we rally, I'd wait to see if this level here holds just below the big 70 level, sell weakness. You wouldn't have much risk if you did that, selling a rally. Obviously, you'd have to come down or just sell through the low. I've shown the monthly charts in previous videos. I won't show them here, but look, looking for a move to 65, then 60. Okay, so if our view is correct, a lot of downside. Okay, where shall I go next? Euro USD. Now, in terms of this one, we're still holding our trade from 101.80. We're at 99.64, but we nearly got stopped out of this one. That tail there got up to 101 and missed our stop by 20 pips. Obviously, we've come back down. Now, 4 days of low volatility. How would you play this one? Well, the big trend is firmly down. And following the euro down for well over a year. Hasn't had much upside in the period. A lot of people say it's getting a bit oversold. It's not oversold. Pointed it out in last week's video. If you look at fair value, it's got a lot further to go on the downside. My own view on this one would be if it goes above the par level, sell back through par, stop. You could use our stop 101.20, or if we don't rally, just go through here. Okay, so basically through these two bodies down at 99.30. You can see we took 50% of our trade in, 99.30 back in. Okay, long way to go on the downside. Yeah, the low volatility at the moment, not much upside though, just waiting for it to sort of hopefully gain traction to the downside. Where are we going to go next? We're going to go to another commodity currency, which is NZD USD. Got a short 63.70 down, came up above the 62 level, almost getting to our stop, but rejection on Friday. This is an easy one again in our view in terms of technical. 62, round number, first level resistance. Just key off that weakness, stop behind second level. What if we don't rally? Just basically go through the 61 level. I didn't draw the line in, but you had two tail pokes through. Then we got back above, two candles found support there. It won't support again in our view. If we go through 61, we should continue to the downside. You do have some monthly support at 60, but I think if we break 61, we should go on to the next monthly support level at 55. New Zealand heavily correlated with China, just like the AUD. So yeah, hopefully lower prices. Some USD correlated currencies. If the euro goes down, that impacts on the correlated currencies or proxies, but also in terms of this one, the NOK, it's a commodity currency, and also it's very sensitive to global growth. Okay, and obviously we're looking at a slow up. We're long at 972 through this level here. So the three red candles, two bodies and one tail. and I want to add above 980. Okay. Now, in terms of this one, you could do the same. You could put a trade in on a dip back to first level support, or wait for 980 to give way. If it does, stop can be behind first level support rather than second. I think that's a nice bullish candle actually through 960, then up. Hopefully we break out. Really good risk to reward if our target is reached at 1040. Last week's video, this was our big winner, USD SEC. USD corrected, got a nice trade off the 10 level, goes up about 7%. We get clipped on stop, but we just got back in at 1062. And I think, this first level of support should hold. Our stop is behind second level. How would you play it? If it goes higher, you could just buy. I think we should go up to the 11 level, which is somewhere up here, or buy a dip to support. SEK is probably more correlated with the global economic outlook than the NOK. Okay. Where's the last one? This is USD SEK, and I've just actually noticed I made a typo. I put 23.51 entry. It should be 24.51 entry. So basically, we were long last week, get stopped out, come back in long, still red, but yes, a long tail exhaustion, looking for a breakout. Now, in terms of the CZK, a lot of exposure to Russia-Ukraine trade, that's gone. Also heavily reliant on gas, that's gone. And I think it's about 80% of exports go to Eurozone. So it's a bit kind of an emerging currency, market currency as well. Just need to see this level break. Where could we go? I've got 26, which is somewhere up here, but we could go even higher. So there, the Euro proxies done. One pair that's, the USD hasn't really had too much strength on. It's been kept down by the Mexican peso. Big fall there, bit of a rally. We've come in long now. Stop behind this support level. We've got first level support there. I think if we open blue, that is a buy. You can always key off first level support again. There's plenty of upside if this one gets moving. MXN is a commodity currency as well as an emerging market. Emerging markets, if you get big risk off, because they rely on dollar funding, tend to get hit hard. MXN has not been hit hard yet. So looking for it to basically get a hit, we shall see. But in terms of risk to reward, even to this first level, it's really good. Second level, obviously, even better. Longer term, monthly resistance at 22. Am I being ambitious? We'll see. But certainly I think the USD should get here. Possible run on to there. Big risk off will take us to 22. Last pair I'm going to look at. USD ZAR. Commodity currency, it's an emerging market and it's heavily correlated with China's outlook as well. Nice rally. We get stopped out. Just now waiting to see if we can break above the high. If we can, 1850, then 19. That's off the top of my computer screen, I think. You can go look at obviously monthly resistance yourself, but they're the USD pairs that I really like. Also, one pair you should keep your eye on. I didn't mention it when I was looking at the outlook for China. It's USD can't say it, versus offshore spot one. I go to the daily chart. It's kind of building up strength to the upside. Now, in terms of the USD going up on the one, you can see on the weekly chart, nice move up there, bit of a lull, two nice strong weekly rises. Shows how bad things are in China. Okay, People's Bank of China letting the USD rise because they want to get competitive advantage for their exports, okay? And they're ignoring rising import costs. That's because their economy is slowing up. That's my view anyway. Now, in terms of, yeah, it is a big problem in China. So there's a major problem in terms of the global economy. It is, but also what's going on in Europe. You know, it's a real, how would I put it? Yeah, bad situation in the global economy, but that is historically bullish for the USD. We shall see what happens, but yeah, looking good in terms of USD pairs for us recently, and hopefully it continues. Right, that's the video for today. Thank you very much for watching. Take care.